the policy decisions. So the discussions about different scenarios concern the length of the program, the size of the monthly flows, and so it was, as I said, a very preliminary discussion, mostly geared to ask questions. And the pros and the cons of different scenarios were discussed, but by and large, on this point, what the Governing Council will ask for is, will want to see is the work by the committees that were tasked to continue working on that, so they will have full information. And but one thing is clear: the bottom line is that interest rates will stay, as it's written here, at the present levels for an extended period of time and well past the horizon of our net asset purchases.
Mrs. Kolimowski.
Okay. Two questions. The first one, you said the further appreciation of the volatility of the exchange rate will require monitoring. Should we think that, and you mentioned last time that, or it was actually in the account, that that it could lead to excessive tightening of monetary conditions. Are we actually at that stage already when it comes to tightening of monetary conditions? That's my first question. Could you right now commit that we would know the decision about the future of the QE program? We'll find out about it in October, or it will be delayed even further until the December?
Thank you. Following the recent appreciation of the euro, financial conditions unquestionably tightened in the euro area, but they remain broadly supportive of the non-financial companies and enterprises. The second question is about the date. We had a brief exchange on that. The Governing Council is, and as you might have seen, is we reiterated it's this fall as the period when these decisions will be taken, because the decisions are many, complex, and always one naturally sort of thinks about risks that may materialize in the coming weeks or months. So that is the caution about not specifying a date. Probably the bulk of these decisions will be taken in October.
Ms. Trigg.
Thank you very much, Johanna Trigg, Politico. I also have two questions. One, when you decide about the future of the QE program, what is your personal preference? Would you envisage then to sort of communicate a full roadmap, or would you only communicate like the next step ahead? For example, in the past you said, you know, you will reduce the monthly purchases, for example, by 20 billion. Would you, for the next 6 months? And then you will brief us again a couple of months later. Or would you say, you know, I expect to reduce it by 20 billion now, and then again after 3 months by another 20 billion. So and basically, so we have a roadmap until the end of the program. I was asking about your personal preference, if you have one.
I don't.
Okay. And then the second question is, there seems to be, you know, when people discuss the future of your program, very often the potential scarcity of assets is mentioned. And so that, you know, people think you might exit not because the inflation environment is ready, but because there's nothing left to buy. Have you discussed at all changing the rules of the program just to convince markets that you can do more if you want to, just to dispel these doubts once and for all.
So obviously he hasn't done enough to help you sell the euro.
Really the scarcity issue.
He has definitely opened the door for December to be pushed back, though.
There were, by the way, these problems, these doubts.
The US dollar broke 91.60, 91.80, the US dollar index. Now, there hasn't been a follow-through push yet. I'm just going to sell a little bit of euro here with a stop at fresh highs. So it's a relatively small risk to a potentially large reward if the market stalls here. Now, this is not a very trade that I would suggest that you go heavy on, or you try to be take as guidance that I'm very bearish on the euro. It's just there is the potential here for reversal. If we get taken out at fresh highs, then obviously then you get stopped out if you're following the same sort of trade. The market's in no mood to sell the euro, it looks like so far. Okay, but he has shown a little bit of discomfort with this ECB movement, the euro movement. He just hasn't said the right words yet. I'm just seeing if this QA he can come out with the right words. So far he hasn't.
Is it your task to clarify the road ahead and to stabilize expectations rather than to leave it until the very last second?
Well, expectations are not destabilized at all, in my view. But in any event, I think policy decisions that have many dimensions are complex, need time to be taken, need the reasonable consensus to be undertaken. And as I said, the fall is the date that's been announced. And as I said before, probably, unless a risk that is not seen today materializes, we should be ready to give the bulk, or to take the bulk of these decisions in October.
I mean, that's sort of what the market wanted to hear. So that's not going to help. He needs to focus on the euro selling.
Thank you, Eric Culp, Live Squawk News. My first question is, do you take national or member state political situations into consideration when you're considering when to announce a policy like the taper?
Our program is a program that is being designed in order to pursue, in order to implement our mandate. And our mandate is the pursuing of price stability for the whole of the Eurozone. In this sense, that's what determines the size, the design, the composition of our program, not specific national interests. And one can actually explain very clearly that whenever one sort of appear, when people seem to say, oh, you bought more bonds of one country and less of another, it's happened because of temporary technical factors that have been corrected in the subsequent months and weeks and months. So it's due mostly to liquidity,
very similar
considerations, the rhythm of the reinvestment program. One can easily explain.
I'm not sure that this is going to work out, mate.
Yeah,
this looks very strong now.
He's, the
market's really pushing here. I think the break of the dollar index is going to hurt this.
Your decision forward.
Yeah,
a second question, you said that you'd like to take the money from the maturing bonds and use that.
I think this is going to take out the highs
program. Will it be used exclusively for that?
Well, certainly we said that we foresee a reinvestment program, and this reinvestment program, by the way, will become more and more sizable, of course, as our QE program has been continuing now for years. So the reinvestment program will become sizable and will continue. Yes,
he's basically said that October is when they're going to announce tapering in December. So far, from the market's going to take that. So he said that the thing I took away is he said that euro is complicating things, making volatility. but it hasn't changed the forecast, so he still expects October to be the main announcement.
I have two questions as well.
That's not negative enough.
Starting as well with one on the capital key. Looking at the recent data for August, it shows that you have bought over proportionally Italian and also French bonds. So my question is, going forward, are you going to buy the others, which you have bought under proportionally a lot more in the coming months? And the second question would also be on what we have been hearing from a couple of bank CEOs, Mr. Krein of Deutsche, Lloyd Blankfein of Goldman. They were all warning of bubbles, potential bubbles in markets. So how concerned are you about them? And they were also attributing those bubbles to a certain extent to the ultra-loose monetary policy stance, not only of your institution, of course, but also worldwide. Thank you.
Thank you. On your first question, as I said before, there are temporary deviations from the capital key. There have always been temporary deviations from the capital key for the simple reason that some countries do not participate to the QE program, Greece and Cyprus. So no wonder of that. There is nothing no mystery or no surprise there. And there have been deviations, there will always be deviations from the capital key due to the liquidity conditions, due to the fact that we want to be as market neutral as possible in our purchases. So if you have very tight liquidity conditions in one market, you just slow down with purchases. There are natural times of the year, like it happened in August, it's going to happen in December again. So it's just when you slow down with purchases. So these deviations from the capital key don't indicate anything else from what I said. Now, on the potential financial stability risks stemming from monetary policies that are very accommodative for a long time, it certainly is a danger. But do we see that now? No, we don't see systemic danger coming from bubbles. If you look at the various markets, the stock market, the bond market, the prime commercial real estate is the only area where you actually see stretched valuations. But even in the residential real estate, you see situations where prices have been going up pretty fast in some large cities, in some countries, but not on average, and not in other cities in the same countries or in other countries at the same speed. Having said that, if these sort of bubbles, the other important consideration to make is, even though we see stretched valuations in some markets, as I mentioned before, the prime commercial real estate market is one, we don't see the other component of a bubble which accompanied crisis in the pre-crisis time, namely an increase in leverage. We see the credit remains pretty subdued all across the board. So that is absence. Also, one has to consider that were we to see such situations at the local level, the answer to that should be macroprudential instruments by the national governments, and not changes in monetary policy. That as far as the issues that have been raised in this conference. Thank you.
Is it possible that at some point in the future you could widen the type of assets that you buy under your program, even as you pare it back, for example, in the field of stocks or non-performing loans? And a second question on the question of investment banks, global investment banks who want to come to places like Frankfurt after Britain leaves the European Union. What steps do you think supervisors need to take to ensure that they are under close supervision? Because of course big investment banks bring big risks.
On the first question, it's not discussed. It was not discussed, so I'm not in a position to say to comment on that. On the second question, if Mr. Costanzo wants to answer on that.
Yes, it's very simple. Of course, we are prepared. The single supervisory mechanism is prepared to deal with those type of institutions, some of them similar to institutions that already exist in the euro area. So no problems, specific difficulties will come from that development.
For the dollar index?
Mr. Malin?
All right, maybe the euro will top out here.
Jan Malin, Handelsblatt. Mr. President, if the exchange rate is a source of uncertainty, as you said, what can you really do about it if it continues and if there are overshootings? And my second question somehow relates to that the ECB is in a period of high uncertainty about its monetary policy. Other central banks, for example, in Norway or Sweden, try to reduce uncertainty by publishing also forecasts on interest rates. Why don't you do the same? Thank you.
Thank you. On the first, you see there are two sentences in the introductory statement. At the same time, the recent volatility in the exchange rate represents a source of uncertainty which requires monitoring with regard to its possible implications for the medium-term outlook for price stability. And then you have another sentence that says, this autumn we will decide on the calibration of our policy instruments beyond the end of the year, taking into account the expected path of inflation and the financial conditions needed for a sustained return of inflation rates towards levels that are below but close to 2%. And now that says all. Now, on the second point, I don't think we are in a period of high uncertainty. I think we are in a period when we are studying what to do next year when the present program expires. Also, let me add that these changes published in the forecast are not new. They've been done, they've been made several years ago, as a matter of fact. I don't know whether they've been very successful in helping the central bank to get out of the uncertainty. If the uncertainty is the element and the metric, sometimes they've been successful, sometimes they've been judged not to be as so successful. So we have to be extremely cautious. The way staff projections are produced, the way they are communicated, even all our communication is the result of many years and the work of many people. So we learn from our history, from our experience, from other central banks examples as well.
That's good for them.
But it's not something we can go lightly trying to experiments. This issue, by the way, had been discussed by my predecessor when the one you mentioned about the Bank of Sweden, Bank of Norway, at that time. Thank you.
Mr. Barbera?
Alessandro Barbera, La Stampa.
Yeah, I think this is going to be well supported now.
ECB,
the level you want to watch is the dollar index back towards that
correct level of the exchange rate. If I ask to Professor Draghi, when the exchange rate can become a problem, which is your answer?
My answer is that I don't comment on levels of the exchange rate.
Ah!
I left the university many years ago, more than I want to remember.
Mr. Madelin?
I think he needs to comment on the exchange rate if he wants the euro to fall.
Thibaut Madelin with the French newspaper Les Echos. What is the exchange rate you took for these projections, for the inflation projections and also growth projections? And also, could you explain us why you've decided to announce the bulk of the decisions or to take the bulk of the decisions in October and why not in December, since you may have new hindsights on growth and inflation projections since in December?
Well, the answer to the second question is really, we will announce when we are ready. We think we are going to be ready for much of what we have to decide by October. But as I said, the Governing Council is kind of reluctant to commit to a precise date. The sense is that in October we should be ready. But if we are not, then we postpone. And the second thing is that we don't know exactly if any serious risk materializes which warrants such postponement. Right now, judging from the way the work is going, we should be ready, when I said. The projection, the rate that was used in the projections is around 1.18 vis-a-vis the dollar, US dollar.
Okay. There we go. That's something there to chew on.
As you know, the exchange rate is fixed, is treated in the projections all the time as a constant, and the value in the market of the cutoff date of the projections is the one that is inserted and considered in the projections. So it was mid-August.
Ms. Jones?
They don't get updated staff projections until December though, so they can't
Mr.
Draghi, you can't expect
the euro
the
seems to still be
decisions
trading
in October to
above the rate which you've just referenced there, the $1.18 rate, despite your comments. So does that concern you at all, or would you care to comment on that? And for my second question, there seems to be a way, a little bit of a change in the way people are perceiving the ECB's reaction function. Investors are increasingly betting that you'll leave interest rates unchanged until 2019, and that these will be the primary tool to bring inflation back to target. One of the reasons being that there are concerns that you'll run out of assets to buy, and that bond buying is more something you do to fight deflation and perhaps boost growth rather than fully return conditions to normal. So I guess my second question is, would you broadly agree with that assessment that increasingly interest rates do become the primary tool?
Well, I'm not in a position to say that because, as I said, we haven't discussed the first part, namely the actual numbers for what the APP program is going to be in next year. But I said one thing here. I said that we expect the interest rates to remain at their present levels for an extended period of time and well past the horizon of our net asset purchases. So that I agree with that. You said about the interest. Well, look, the exchange rate, I don't know how much it's trading, but we're talking about the 118 is roughly around 118, and it was August 14th. So we will have to see. Now I'm told it's 120. Okay, but I don't comment about levels of exchange rates anyway. So.
This is hilarious. This is an hilarious press conference.
Ms. Mastrobuoni.
Tonia Mastrobuoni, La Repubblica. Two questions, Mr. Draghi. The first one is, you mentioned before the reform of the Eurozone, but there are many ideas.
I've been told it's 120. Who's telling him that?
The Ministry of Finance. There are very different ideas coming from France or from Germany. Should he have the power to have a sort of intervention power in the balance sheet of the countries? Should it have a?
I think this is pretty important, guys. The market is not responding. He's not trying to talk it down. It's very hard for me to see without a US dollar reversal. So that's why we're going to keep an eye on the dollar index here. Without a US dollar reversal, maybe on the back of tax reform or relief as the government shutdown doesn't happen, it's very hard to see a euro that's going to come back down to earth now. Like, he's had multiple opportunities to be much more dovish than he has been, and he hasn't. All right, he's saying October's coming. That's when we're going to do the decision. They're not really talking up the chances of that not being the case. So for me, this is pretty clear that
budget for growth
can go higher, and dramatically so in the coming days, as he missed a chance here to talk it down, an important chance,
and so on. And there are even many ideas about the ESM, how it should be reformed. What is your idea about this? I mean, about the reform of the Eurozone, and how should it be, and the new Ministry of Finance be? And the second question is, there's a discussion going on between among economists about this risk of a low inflation era because, I mean, the growth is robust. You said it, the unemployment is going down, and there's much liquidity in the markets, but still the inflation is very weak. So should we be prepared to this risk of a, what do you think about this discussion, of a low inflation era?
Now, the important aspect of the current discussion, that's our first question about the European Monetary Union, its reforms, is that the member states have realized how incomplete is our monetary union at the present time, and how such incompleteness has made the crisis that we are just coming out of
looks good.
More serious than
looks very good.
Would have otherwise been.
Only danger to this trade is the North Korea now.
To be welcomed, the fact that the member states, because you see the task to discuss and design the reform of the monetary union is not the ECB's task, it's the member states' task. So, but it's welcome that they actually start this discussion. It's going to be a certainly complex discussion that will take place in the coming months. The ECB, of course, stands ready to help in this discussion, but we are not party of this. Now, your second question is, should we be resigned to low inflation? The answer is absolutely no. I said many times that inflation is now will eventually converge to our aim. What makes us confident that this happens? Essentially two factors. First, the fact that we keep in place the very accommodative or the extraordinary degree of monetary accommodation. And the second is the broad, robust, solid recovery that we see across countries and across sectors now. This recovery is having a profound effect on the labor market. I mentioned before about the number of jobs being created since 2013, 6 million. But there are many other indicators that I've given to you on other occasions showing the strength of this recovery that also now touches upon investment and the strength of consumption. This recovery gradually will close, and it's actually closing the output gap, and will gradually close the labor market slack. But this labor market slack is turning out to be bigger than was previously estimated, and we went through this on another occasion, why this is so. And nominal wages, which are a primary driver of inflation, are also lagging behind what one would have expected from such strong recovery across the board. And they're lagging behind for a variety of reasons. I've discussed this on another occasion, and some of you were there when I gave a speech on that. But basically, they have to do with backward-looking wage negotiations, a trade union strategy geared mostly about stabilizing the job rather than going for wage increases, about low productivity, about other factors like the global value chain in a supply of factors. So there are lots of these factors. Now, some of these factors will disappear quickly or quickly. None of them disappears quickly. Some of them will disappear first as the labor market slacks close. Some others will stay for a longer time, but there is no question that with the ongoing recovery, in the end, our inflation, the inflation rate will converge to our aim in the way we want.
I think if he had something to say that was going to get the euro to fall, he would have said it, guys. So that's an important part there.
Namely, in a durable fashion and based on a self-sustained path where there is no need for our monetary policy any longer. So, confidence, patience, because we have to be patient for that, and persistence, however. That's very important. We shouldn't sort of either change the definition because we don't reach that time.
Thank you. Markus Südhausi, Deutsche Zeitung. Mr. Draghi, the Eurozone might enjoy a growth rate this year of about 2.x%, which is the highest growth rate we've had since 2007, 2.2 even. So I'd say the situation today is much better than 2007, much better than 2010 or 12, but still, and that's my question, still the monetary policy is more loose than during the financial crisis. That's hard to understand for me and for the general public. Maybe you could try to explain it to me.
Yeah. First of all, we have a growth-based recovery where growth is solid and robust, and as I said before, across countries and sectors. But there is still a big labor market slack that needs to be filled. But the key point is that we don't have a dual mandate like the Fed, where we can sort of look also at conditions of unemployment and labor market. We only have one mandate, which is price stability. And price stability for us is defined as a level of inflation that is close but below 2%, which should be reached in a self-sustained and durable fashion. And we are not there yet. And the Governing Council wants to get there. And there is nothing that will derail its will to get there. By the way, this anxiety should be also based on facts, because so far everybody benefited greatly from this monetary policy. All countries benefited greatly. So this angst so far has no evidence that could justify.
Mr. Lacour?
It has to be almost over, guys. We're going to transition into Andrew Lockwood's stream shortly. He's going to have his take. Technically,
two questions,
you know, a lot of damage has been done to the US dollar here. So we have to be,
the minutes of the
there's a lot
last
of new
meeting,
trends potentially on the horizon now.
there was this interesting sentence saying that it was suggested that the stock versus flow effects of asset purchases be considered. Was this aspect discussed today, even preliminary, right? And what does that mean when the level of the monetary policy stance is at stake? And the first question, I mean, by that, if you downscale the QE, this stock and these flow effects will maybe have an importance. Maybe you can elaborate on this. The second question is on France. It is processing now a flagship reform on the Macron presidency, which aims to liberalize the labor market. The effect will be to foster job creation, but maybe a lot of jobs created will be precarious or maybe low paid. So the opinion of a lot of people. So that will not trigger this reform efforts are maybe to be well, it's important and good for any country in the Eurozone, but that means maybe Macron will make with this reform the inflation case of ECB maybe much harder to achieve than it is already. What do you think?
Well, the first question, we didn't have a discussion about the relative importance of stocks versus flows. On the second question, I mean, we've full confidence that the French government knows exactly what to do to undertake the needed structural reforms. And amongst the targets that all structural reforms of the labor market had, now whether they achieve that or not is another issue, but certainly the target, one of the main targets was the elimination of dualism in the labor market. Because one lesson we learned from the crisis was that in all the jobs that have been created in some countries which had very rigid labor markets, and so these jobs disappeared with the crisis, and they were the first jobs to disappear. In the early 2000s, some countries facing very rigid labor markets created or passed legislation which allowed the new entrants in the labor markets only if they were based on labor contracts which were very, very flexible with respect to the ones that were already in the market, the already employed. And this way, between 2000 and 2006, millions of jobs were created in some of these countries. And by 2008, most of these jobs had gone. So simply the crisis destroyed all of them. So, and by the way, the flexibility that was introduced with these contracts fell disproportionately on the young sectors of the working population. So I think this has been well understood by everybody, and I think all reforms of labor market should aim at decreasing or eliminating this dualism.
Mr. Schröers?
So we've got a little bit of profit taking in the euro, but nothing crazy yet.
My first question
might be
is on inflation beyond 2019. You will only publish a projection for 2020 in December, but given the time lag of monetary policy and given that medium term in your definition of price stability does not necessarily mean 2 years, I guess you already had a discussion also of views today on how inflation will evolve after 2019. So what, maybe you can give us a first insight. What is your expectations for 2020? Will it be higher than the 1.5%? And the other one is the Fed is widely expected to make an announcement on the balance sheet reduction at its next meeting. How would this influence your decision on a recalibration of monetary policy? For example, do you see a risk that if the Fed reduces its balance sheets in 2018 and you try to recalibrate and maybe taper in some sense your QE program, that there will be a sharp increase in the longer term yields? Thank you.
Thank you. With respect to the second question, really we don't, I mean, our mandate is defined on the basis of our jurisdiction. And so what other jurisdictions, especially large jurisdictions, do is certainly part of our information set, but in a sense doesn't affect our monetary policy strategies other as a source of information. Also, we have to see what this will imply for interest rates, what this will imply for financing conditions in general. And they, if anything, may be part of our information set that defines our monetary policy. But so it's I would be sort of cautious about imagining that we coordinate our actions, that we play strategic games in between us. My expectation, of course, in 2020 our inflation rate will converge to our objective. But we didn't discuss it today. Thank you.
Mr. Ewing?
Jack Ewing, New York Times. I have two questions. The first is you mentioned that there was a discussion about whether the currency volatility is due to exogenous factors or internal factors. I wonder if you could maybe just give us a little flavor of that discussion. If there was any consensus on how much is temporary geopolitical factors and how much might be sort of permanent Eurozone fundamentals. That's the first question. The second one is you said that most of the decisions will probably be taken in October. I'm paraphrasing you. That suggests that you have in your head a certain set of decisions that have to be made. And I wonder if you can just give us a little bit of detail on what those decisions are. Thank you.
Ooh, that's a big question. Big question.
Thank you. I mean, answering your question based on the conversation we had, I said that what was discussed was a set of different scenarios. We discussed the length of the program, we discussed the size of the program, or better, we discussed the trade-offs between different possibilities about length and size, and the pros and cons of different scenarios and the transmission channels of that. That is what we discussed today. Your other question was about yes. Well, we had a staff projection here that basically revised downward the inflation rate by some amount based on the based on the appreciation of the euro. Now, when the shock of the when the exchange rate changes and the change is purely exogenous, you have a pass-through on inflation, which is I think it was 0.5%, something like. I gave this number time ago, and it's actually published on a paper by the ECB. When the change in the exchange rate is not entirely due to exogenous factors, the pass-through is lower. Now, the sense of the discussion we had is that there were differing views about what is the intensity, how much is exogenous, how much is endogenous, how much is going to be persistent or not. But there was a general, as I read in the introductory statement, there was a general concern that the recent volatility in the exchange rate represents a source of uncertainty which requires monitoring with regard to its possible implications of all.
See, he said this a few times, guys. It's not enough. It's definitely not enough. You know, the fact he's even saying that they're not sure how much of it is, you know, warranted, the euro strength, is basically meaning that, you know, they're not really that worried about it.
The medium-term outlook of price
stability. You could use much stronger language.
Also, consider another factor to this, that in judging the medium-term impact of a certain change in one of the financing conditions variables, and the exchange rate is indeed one important one, one also takes into account the credibility of our monetary policy. And that is also a factor that, that plays a role. And as I said before, the Governing Council is firmly committed to this monetary policy. Thank you.
And the final question for Ms. Thiers.
Jenny Thier, Frankfurter Allgemeine Sonntagszeitung. Mr. Draghi, do you have any information on negative side effects of the quantitative easing program yet that you can tell us? Thank you.
The negative side effects of the quantitative easing program, I don't have. It's not that I don't have any information. We don't see negative effects of this program.
That's a crazy answer.
We've discussed several times the potential side effects. They are vastly overwhelmed, offset by the positive effects. So the answer is no. Of course, the negative interest rates is a different thing. It's not the QE. And there are obviously side effects to the negative interest rates. We've discussed it many times. But again, they are vastly offset by the continuing increasing evidence of the effectiveness that negative interest rates are having on, and the positive effects that negative interest rates are having on growth, and therefore on the recovery, and therefore on price stability in the medium term.
Alright guys, that's it for tonight. Now obviously the euro is above 120. If it holds above 120 throughout the day, that's going to be very bullish. I think it's going to be well supported on dips as well. So the market is showing its colors a little bit here, and it's going to be very hard to see a sustained reversal in the euro. Dips should be well supported. So if you're not in long euro, look to get long euro. It looks like a pretty solid trade at the moment, and the market now will look forward to December. The October meeting will become the new September meeting. With the US dollar under pressure, it's going to be easy to see the euro press higher here. Perhaps, you know, if it goes too high, we'll get a little bit more concern from the ECB at the October meeting. But that's a problem that's not that bad, right? That's a good problem to have if you're long the euro. You know, the market loves to press high as possible, and who's more worried now, the buyers or the sellers? Definitely the sellers, and that's an important little litmus test that you have to ask yourself in the market each day. Which side you want to be on, the people who are freaking out, who are short below 120, or the people who are just waiting for the market to finish its natural rally. All right, so look, sorry for the issues at the start of that stream when Draghi spoke. It seemed to break the computer a little bit, but it came good in the end there. We'll be back on Monday to discuss the outcome and the reaction and the price action since the ECB. I'm going to be moving across now to Andrew's stream. He's going to have a bit more of a technical outlook of what's just happened. A lot of levels have been broken, a lot of highs, and all the new highs now. And you know, big moves on the dollar index. I think is it's clear here that you should be following the US dollar weakness trend. Apart from the positioning on the US dollar, there's very little reason to be bullish right now. Although with the Fed coming up in a couple of weeks, perhaps that narrative can change. Just right now, you're probably going to see the market push that US dollar weakness a little bit further. All right, guys. Best of luck with your trades. Be nimble, but I think it's pretty clear what the trends are.